What's going on, everybody? This is the blockchain backer bringing you the latest cryptocurrency news and analysis. Today will be a quick video peeking over here at the Bitcoin price chart. Wanted to point something about one of the confluence indicators we saw earlier this week in regards to the 50-week and the 100-week getting ready to cross as they have historically throughout the past. We'll kind of match that up from a time perspective on how that has happened historically at each bottom and what the price significance of it was when that actually did happen. As for the actual price action for Bitcoin in the crypto market, slightly green, but it's kind of been a washing machine all day, up, down, up, down. I just happen to be recording right now and it's slightly up in the market, but it's been both ways today, just kind of washing machining in here. You can look at this on the daily time frame to see we've really just been kind of stuck in this range in here. If we were to assume price is going to continue behaving how it's behaved for pretty much the last year, the washing machine likely to continue on for some time in here, probably similar to what we just experienced as we were holding above 20,700 for several weeks. Maybe it was about a week. If we are in like a longer term accumulation style in here, that one would assume the price action will still kind of boring here for Bitcoin. At least that's kind of signature price action of what we've seen at bottoms. So for the last couple of weeks, we've been talking about all of the different indicators on Bitcoin signaling similar behavior of what had happened when a bottom had already come in. And earlier this week, we started talking about what happens when the 50-week crosses through the 100-week moving average. And it's one thing to just have these cross, but it'll be interesting to see where are they actually crossing at in relation to the historical price action of Bitcoin at each phase throughout history. We know there's a plethora of things on here that are similar to the past of what happened when Bitcoin bottomed, such as the weekly oversold RSI, the capitulation fractal, the fear and greed index popping out of extreme fear after being there for several months, and now our crosses coming in here on the weekly moving average, in addition to being at a retracement level, the last one, the 786, along with the previous all-time high. But there's a lot of people that still speculate that we still have further down to go. Anything is possible, but technical analysis is about trying to draw conclusions based on how the market has performed before. All of these tools wouldn't matter at all if they didn't have a historical precedent. We wouldn't use moving averages if we didn't notice that they historically have some type of reaction to them. Due to that, we pay attention to them. We wouldn't care about the weekly RSI if we didn't have a historical precedent for it. Otherwise, it would just be a useless indicator and mean nothing. We wouldn't care about Fibonacci retracements and use these in any way if they didn't have historical precedent set by them to show that reactions do happen from them. So all of technical analysis in the first place, it's not magic, it's not perfect, but it gives clues. And many times it can be right. And 100% of technical analysis is from drawing from the past. It is saying this has historically worked before. We are set up in a manner that is similar to history. If things play out differently, then they play out differently. But the idea of TA is to say we've done these types of things before and we've done them multiple times. An interesting thing to notice about where we're at currently with our price action when it comes to Bitcoin and where the cross of the 50-week and the 100-week is occurring from right here is that Bitcoin is currently 47% below that price level. It actually bottomed 53% below that level. We go back and we look through history and we say, all right, well, how about this time when it crossed right in here? How deep did we go below that when the bottom got put in? That time, 47% below that price level. How about in 2014 and 15? We went 53% below that price level. Well, what's interesting about where we're at right now? We're at 53% below that price level for where this bottom has come in. We can also notice where this cross is taking place at. It's taking place exactly where the capitulation began at. We look back to 2018, we see it happened right where the capitulation began at, and we look to 2014 and we see that it happened right where the capitulation began at. I don't know about you, but all that is very interesting to me. A quick peek over here at the stock market. I could say I'm not really thrilled about the price action we're seeing over here in the Dow Jones. We can see for the NASDAQ and for the S&P 500, they both look okay for like a continuing bullish structure to happen in here. But the Dow Jones, not so much. And the Dow Jones is really kind of the one I primarily focus on, even though there's only 30 stocks in here. This is one that's really been more kind of confluence with crypto than the other two. So a lot of my thesis on the actual stock market on if it's going to go on and set a new all-time high or if it's just going to go into a retracement in here, that thesis is kind of starting to get into a little bit of development because this is definitely aggressive. If this thing continues going down lower, it's really giving itself really like a best case scenario in here for some type of ABC correction to come in and then lights out in here. But really none of that gets answered on whether or not that thesis can even be true unless if that level gets taken out. And that's a long ways away. By the time you get there, there would be a ton of pain. And we've talked about this many, many times on the channel that so long as that level is still holding, it's still a parabolic rise here for the Dow Jones Industrial Average. And so long as it's holding the 200-week moving average or the February 2020 high. But if you take that out, you have essentially said lights out, the bubble has popped, and this thing is done. But it's interesting because sometimes we get confluences between markets to tell the story of which one is going to happen. Bitcoin and crypto is kind of the precursor saying, hey, you know what? This thing's going to fall apart. There was hidden weakness, I guess, going on in the stock market that sent crypto down first. And Bitcoin is showing incredible similarities of to the bottom already being in. So while a ton of volatility is in here, while this level's still holding in here, you know, maybe Bitcoin's given a little bit of a different story that we're just not seeing over here on the Dow Jones just yet. Again, the S&P 500 and the NASDAQ are still okay, but these dips do, for me, provide the increased likelihood of that the best thing that this thing could do would be just a retracement back up into retracement levels. So that's for another time. This is something I'm definitely keeping my eye on over here on the stock market for my future thesis of the market. Again, if it breaks down below this level, dear God, help us all. But so long as it's not, it's still higher highs, higher lows, 200-week moving average still holding, but it'll still open up the door in here for whether or not we are just ABC correcting in here. And that like the NASDAQ is giving a clear 1, 2, 3, 4, 5. And then what happens after that wave? You have an A, B, C correction that doesn't get above the height of wave 4. And then what happens? You repeat the same thing all over again. But we're not there yet. However, the Dow being the first one, it definitely has my interest perked. One thing you can notice over here on the Dow Jones is that really like there's this 1 hour wick right here that fired up right here above the height of the June 27th hourly top. So it's a 1 hour wick. The NASDAQ doesn't have that, right? So you look here, that's that same time period right here. So it's really just kind of holding above this June 27th price level right now and doesn't have that extra wick taking out much higher like the Dow Jones does right in here, but still holding this level right in here. So I think the next couple of days really kind of will tell the story a little more clear, but this has definitely been aggressive here in the stock market. So no signs yet that it's bouncing. It looks like it's facing some type of support level coming in here, but no any evidence yet of it being like, yeah, it's a good one and buyers are coming in to fly just yet. So story developing here in the stock market, it appears. But if Bitcoin is any type of indicator of overall market health, it would tell us that things are going to be okay. I do know there's a lot of people who are still expecting lower prices and rooting and cheering for lower prices. We all know the things that would happen if that were to occur. You would break the all-time high. You would break the Fibonacci retracements. You would break fractals. You would deviate away from what happens with the fear and greed index once you come out of extreme fear and prolonged extreme fear. You would deviate away from what history has done in regards to weekly oversold conditions. And then at the same time, we would also be deviating away from the distance of the fall away from the moving averages. So one dip lower would mean this time is different. A lot of things are changing in the market. And then maybe that would be an indicator of things are different over there in the stock market. But as of right now, the way Bitcoin's looking historically compared to the past, each time this happened, the bottom was in. That should be okay for the stock market. But if we started breaking down in Bitcoin, maybe that does give us a bigger clue as to the stocks. Otherwise, I look at this and I say, this is a lot of similar stuff. This stuff is still holding in here. Not quite time for me to panic. Because one of the most common comparisons I see of what's happening here right now in the stock market is everybody looking back to the great financial crisis and saying, we're doing something like this. We're on the verge of doing this. But the complications of something like this occurring from where we're at right now are far different than what was happening in here, right? This is like accumulation. You can look back to the prior to the Great Depression, right? We had that same kind of stuff going on in here prior to the big bubble being printed. And if you were to pull a move like that to fall like this right here from where we're at right now, that is not of the same accumulation structure right there. That's the pop of the United States stock market. So if you pulled that off right in there and you ended up popping that with something similar to the great financial crisis, it's not the same scenario in here. This is a bubble that is happening in here. And the question is whether or not the bubble is going to keep going up higher or if the bubble is going to pop. It is not about, hey, a big flash crash is coming. We're all going to buy the dip like we did with C19 and we did with the great financial crisis. It's that a pop of this at this point is like the pop, the one. So I don't entertain a lot of the things that we hear out there from people saying, yeah, the market has to go down just a little bit more for a recession. And all indicators suggest in here that if you go below there, you've lost bubble structures of higher highs and higher lows and parabolic rising, because this is all this is a parabola. This is a bubble. You take out that price level right in there, the bubble has officially popped. And I personally just don't think it has yet with the double tap, bull flag, breakout, back test, violent V bottom, and with where we're at right now, I just don't think that's where we're at right yet. I don't think we're at the point of popping the United States stock market, but I would change my tune should we go below the 200-week moving average and below the February 2020 high. Until then, just from a structural standpoint, I don't think we've done it just yet. But with dipping down further for the Dow, it does add a whole lot more caution. If we do start moving back up, when we get into those retracement levels, it'll add a whole lot more caution. But Bitcoin seems to be telling a story that we're going to be okay. So we'll keep an eye on it. We'll keep tracking that. It's been a little while since we talked about stocks, so figured we'll talk about it since last week was insane. And we still haven't seen any relief yet this week so far. On another note, something that's going to be much more of a focus on this channel for the next coming weeks, because it's like one of the more exciting things for XRP. As you know, the logo on my hat, on my logo for my channel, it's got the XRP logo. It's the largest bag that I hold in the cryptocurrency market. I am thrilled. I know a large portion of my audience is thrilled about any developments going on with XRP. So that's going to be a lot of the focus for the next few weeks heading into that moment. But as we can see now, we did exceed 82% consensus to vote in favor of the XLS 20 amendment for the XRP ledger that will allow NFTs on the XRP ledger. So a huge moment and milestone for XRP. The next couple of weeks, we'll start talking more about that whole market and trying to dissect into that, what to look forward to. I'm not affiliated with any type of NFT projects or anything like that. Like I said, I have no sponsors. I don't even have affiliate links in the descriptions of my videos. So anything that I look at or talk about, I haven't talked to these projects. I don't know these people. So We'll see how it goes. But big moment and big launch happening here for XRP and NFTs. And I posted about this last night once we got above 80%. The 14-day clock starts today for NFTs on the XRP ledger, which is on September 13th, 2022. Validator votes have exceeded 80%, sitting at 82.86% in favor of the XLS 20 amendment. So the way this works is that once you exceed 80%, it has to stay that way for 14 days for the amendment to get pushed through. Right now, it's set for September 13th, 2022 at 7:49 p.m. UTC time. Now, what would happen if one of these validators went back to nay? We'd be back to 80%, and that 14-day clock would sit there again, and we'd be waiting to get back above 80% once again, and then the 14-day clock would start once again. So this thing could count all the way down till September 13th at 7:48 p.m., and one of these validators could flip over to nay and reset the clock all over again, and then, flip back over and reset the clock once again. So hopefully a couple more of these to scoot their way over here to prevent the potential for something like that occurring. So it's exciting to see that we're in the clear right now, but just kind of having that expectation that all it would take is one of these guys shifting back over to nay, and that clock resets. Otherwise, September 13th currently is when we're going to have NFTs on the XRP ledger. And I think, my thought process is that it's probably going to be a little bit boring for Bitcoin, boring for the cryptocurrency market. So I think, the next couple of weeks, focusing on, the NFTs coming to the XRP ledger, you got the merge coming for Ethereum. I think those will be good things to kind of focus on and watch for these next couple of weeks while price action seems the most likely to just kind of be stagnant for a little while. So it's been a while since we've had like excitement surrounding XRP. That isn't like some, like speculation rumor mill thing, right? We have something actually coming. It's pretty exciting. So that'll be kind of the focus for the next few weeks. And I'm looking forward to that. So, all right, guys, I'm going to go ahead and wrap this thing up. I added an update video like I always do on the last day of the month to bcbacker.com. For those who are enrolled in there, you guys have access to that. Just kind of recapping what happened in August. There likely won't be a video tomorrow on Thursday. I've got my drum lessons today, and I've got band practice. I've got like quotations up band practice tomorrow. And I just haven't gotten enough practice in yet. And it's just been like, go, go, go here. So I need a day off for tomorrow because I've already put out a video on Sunday, Monday, Tuesday, and Wednesday. We'll take tomorrow off. We'll put one out on Friday. And then we'll see how the weekend goes. If any crazy price action goes to open me up for the weekend, maybe. Just kidding. I just realized I'm going out of town this weekend. So anyway, no video tomorrow, but I'll catch you guys on Friday. All right, that's it. No more rambling. I'm wrapping it up. Thank you so much for watching. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you could be notified of when I create new content and when I go live. As always, this is not investment advice and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.